Hi, welcome to the Devon Weekly webinar. Great to have you along once again. Joined this week by Portfolio Manager Vic Harris. Okay, Vic, how you going?
Good.
Excellent, great to have you along. So look, there's a lot going on, isn't there? Particularly, we're right into reporting season, starting in New Zealand, obviously well into on the other side of the Tasman as well. So let's get straight to it. Vic, there's been a few names reporting in the media space.
Yep.
Yeah, what are you seeing? How do you call it so far?
Yeah, so I guess, like you said, we're in the middle of reporting season. The next couple of weeks are kind of the biggest weeks, but so far, so good. We're tracking at about 20% beats versus misses. We are seeing a lot of names that have kind of run into results or have done really well through July are kind of taking a bit of a breather. Names that have got a lot of high short interest tend to be doing well. So a lot of short covering, but yeah, they're posting pretty good numbers across the board so far, but the outlook is the key. So in the media space, we are seeing, so we've seen some pretty positive, a bit of a mixture really. We saw Telstra earlier in the week was a pretty good result. We had car sales was a pretty good result, and then Seek was a bit disappointing. So I'll start with the negatives, the positives. So Seek, very good growth that it saw in FY22. So revenue and EBITDA are up 50%, which is some pretty strong numbers, but wasn't as good as what consensus was expecting. So expectations were kind of ahead of consensus, I guess. So it was a bit of a slight miss, and the stock fell slightly on the day. Guidance again very strong, and that's on the back of comping some very strong numbers as well. So they are seeing a very I guess conducive environment at the moment, in terms of record job volumes, is driving that kind of that operating leverage. Australia and New Zealand doing really well, and international markets doing well as well. But the reason the company sold off was just around the guidance and the fact that they're assuming a kind of a normal no change to what we're seeing in the market at the moment. We know that's really tight labour market. That's got to reverse at some point. And so there was a comment in their results briefing that they said there's kind of more downside than upside on their guidance. So I think that kind of spooked investors, and you saw the share price fall after that. But it's trading 30 times FY23. Right. It's kind of expensive, but if you take out the growth fund, the multiples, because of the growth in the underlying business, the multiple does fall quite quickly into FY24 and 25. And management, they're great executors. They're kind of the best in class. So we are continuing to hold across a lot of the funds. Right. Car sales, again, this was a great result. They made an acquisition back in June, so it wasn't too much of a surprise, and they gave a trading update then, so not too many surprises. But again, we're seeing a pretty buoyant auto market there, so they're benefiting from that. And
they're the biggest in Australia?
Yes, yeah, biggest in Australia. They've now got nearly 50% of their revenue offshore, so they've got operations in the US, in Korea, Mexico, Brazil, and so they are, they're doing really well. And I guess the thing with the media names is that they've got a media revenue line in car sales, which is brands advertising on the car sales platform, and that was really strong. So we're not seeing any tick down in kind of brands not pulling ad spend, which could affect a lot of other names like media and Nine and all that. So the ad market is still really strong, and the media industry is still doing well. But again, it's all around that. The outlook, and car sales they expect those car volumes to normalize, and when the economy opens up. But again, I think they've just got a lot of levers to pull in terms of price, product, different geographical regions, in terms of the diversification. So again, I think we're confident in their ability to kind of navigate those cyclical changes that we're going to see for the next 12 months. And then Telstra, again, a pretty steady as she goes kind of business, doing really well, strong free cash flow, good balance sheet, and we expect some kind of further capital returns in future years. And this is a big position across the Devon funds, and one where a lot of these names have a bit of earnings risk if we head into kind of a recessionary environment. We could see a few names have that earnings risk, and Telstra is in our opinion, not one of those. So it should do well in kind of, what if we head into a more of an uncertain environment in the next 12 months.
But Andy Penn, he's moving on, right?
He is, yes.
Yes. Happy about
both CEOs on the call, which was good, with the incoming and the outgoing. So it's good to get that CEO in front of investors to, and she seems pretty good, but
excellent.
Time will tell.
Great. So yeah, other sectors, I guess, looking at New Zealand, we started off this week, didn't we? And we had Contact, and then we had Mercury. So yeah, what renewables, electricity sector, how are you seeing that so far?
Yeah, so both Mercury and Contact posted good results. Contact probably slightly better, and that was reflected in the share price. But both are kind of being affected by these high wholesale prices, which has been caused by the lower rainfall and in the lakes and higher cost of thermal. So we're kind of, but again, both delivered pretty steady as she goes kind of results. Contact, it was an inline result. I guess the main concern was around the dividend, and it was probably a slight disappointment for a few investors. You kind of have to look at it in the fact that they have such a large runway in terms of development projects and development pipeline. So you kind of need to put that in perspective. So we were pretty happy with that. I mean, the valuation's attractive. It's trading at kind of 12 times EBITDA, 5% yield, and it's now 83% renewable. So it's up from 80% a year ago. So that's good to see. And we're also seeing a lot, which affects kind of both of these companies, Contact and Mercury and Meridian as well. In the US, there was an announcement last week around Congress putting more money. I think it was about $400 billion US into their kind of green energy fund. That flows through to those large clean energy ETFs, which flows down to Contact and Mercury. So there is a lot of support for these names, as you'd expect being in that renewable space. And then Mercury, again, dividend and EBITDA were pretty in line. Guidance was ahead of market, which was good. And it's been a pretty transformative year for Mercury. They've done a lot. They've been busy, and it's now it's New Zealand's largest retail supplier of electricity. Yeah. So, which was a crown that was previously held by Genesis. And great to see their dividend. So this is the 14th year that they've consecutively grown their dividend, which is pretty impressive. 14 years in financial markets. That's
pretty consistent. We'd like that.
Yeah, so it's a pretty impressive story. So and the Contact and Meridian are definitely two overweights in the sustainability fund, for obviously.
Fantastic, and wind as well, right? For Mercury, Yes, so they're the biggest now, or
Yes, So they bought the New Zealand wind farm. So so they've got that in there as well. So. Yeah, it's
so overall off to a positive start.
Off to a positive
That's
start.
Great.
Yeah, hopefully we have the same level of positivity next week.
Yeah, excellent. We'll be covering that as well. Thanks for your time, Vic. Thanks for tuning in. So we'll be in for a busy few weeks with the earnings season. So we'll have the investment team here to unpick it all for you. But in the meantime, leave it there for now. Have a great day. Have a great rest of the week, and we'll catch you again soon. Bye for now.